We had an event on Thursday that is kind of a good part one to understand what we're going to be seeing when I show you the trades, some of the trades that we took this week. So let's go ahead and do a very quick recap. I know some of you you attended the event or watched the video, so I'm going to make this pretty quick. And for those of you that weren't able to watch the video or attend, then this will get you up to speed real quick. All right. So we were talking about low exposure trades, and we're going to do that quick recap. And what I mean by low exposure is that you're staying out of the markets as much as possible. And that's very important, and I'll talk about that. First, we got to do all of the disclaimer stuff. This information is for educational purposes only. Trading is very risky, and you may lose some, all, or more than your original investment in trading capital. Only trade with capital you can afford to lose. Past performance is not necessarily indicative of future results. Okay, so today's agenda, we're going to talk about why to limit your exposure, what we look for, what the setups look like, how we qualify them, how we place an order, and that's where we're going to be doing a lot more than we did on Thursday. I only showed you one on Thursday. I'm going to show you several today. Talk about the targets and stops, the trade management, variations of a trade. Okay, so the interesting thing as we go along here, and you'll notice that basically it's the same trade over and over and over again with variations, and each variation has been given a name so that everybody understands which particular variation we're talking about. But by and large, it's the same trade over and over and over again with the same conditions in place, with the exception of maybe tweaking them a little bit here or there. Okay. Then I'll show you real quick the results of our trade room, talk about a special offer. Then we're going to look at more trades, videos on video, and then we'll do a question and answer. Okay. All right. So why are we interested in limiting our exposure? You know, there are so many influences in the markets these days that weren't there even 5 or 10 years ago, and they're just more and more all the time. And these influences have a great deal of ability and resources to move the markets to suit them. Okay. And so, you know, they're actually in the markets with the graces of the exchanges so that they can provide some liquidity, so that, you know, gives us something to trade, right? But on the other side of that, they're not going to do that for nothing. They're going to make sure they make all their profits, and they certainly can. So the more you're out of the markets, the safer you are. Okay. The longer you're in a trade, the more speculative that trade becomes, because you have you're just sitting there waiting for any influence in the market, anyone to come along, any shark to come along to change the conditions that got you into the trade originally. And that happens all the time. In fact, it's happening a lot of times, and you see it happening, but maybe you haven't put two and two together and figured out, well, that's that big movement all of a sudden was one of these market makers that are doing their routine that ultimately is going to make them a lot of money and usually takes ours. Okay. So if you get nothing else out of this today, just understand the longer you're in a trade, the more likely the sharks are going to find you. Okay. The more speculative the trade becomes. So because of the way we trade, there's fewer emotions. We don't need to worry about, you know, having our money just hanging out and hanging out and hanging out and just being in this trade and hoping and hoping and hoping. that something bad doesn't happen to us. Okay. So therefore our trades happen quickly. We're in and out of trades really fast. And because we're out of the markets, it's a real low stress type of trading. We were talking about that in the trade room the other day, how, it's refreshing to not have to be stressed and sweating and panicked while you're in a trade, just waiting for something bad to happen. So the market conditions are immediate, and therefore they're easier to master. What I mean by immediate is that the information coming in right now creates a reaction right now. So we're not looking for a reaction to complete 10 minutes from now, 20 minutes from now, an hour, 3 days. When you enter those longer trades, how many of you use hope? Or somebody said hopium the other day, that trade is going, okay, I'm going to enter this trade, and boy, I hope it goes my favor. I haven't found hope to be a great trading companion or something that I should be putting in my trade plan. It's best to anticipate what's likely to happen right now. All right? So what are we looking for? We're looking for a confluence of a specific set of events or market characteristics. So we're looking for momentum. Now we want to measure strength, which is momentum. We're looking at momentum, and we want to see strong momentum so we can measure strength, so we can anticipate exhaustion or weakness. Okay? If you've ever looked at trading charts, if you've been trading for a while, you know that markets push and they pull back, and then they push and then they pull back, and that's the way markets move. Okay, we're also looking for a type of churning volume. When we get this strong push, and at the top of the push, we see a churning type of volume, showing us that the buyer at the top, if we're looking at the top, we trade both directions, but I'm just using this example of it being at the top. We're looking at the churning volume where the buyers are starting to slack off and the sellers are starting to come in. Okay. We're looking for a larger than the previous bar's up thrust bar. All right. And preferably we like to slam into an area of major support and resistance. And then the kicker, and this was the thing that changed it for so many of us, and that's divergence. Okay. So how do we qualify a trade setup? So here's a rock star. Now, I'll show you quickly what I was just talking about. And we're going to see a lot of this on the trades that I'm going to show you. But just so you understand what it is that you're seeing, let me get this. So here we have a kind of a channeling, right? And if you look at the size of these bars, they're all kind of small and prices just kind of drifting around until suddenly it breaks out of that channel with some bigger bars. All right. And these bars are typically much bigger, double or more than these bars. So suddenly, for what appears to be no particular reason, price just bursts out of that channel. Then we're going to get, guess I should be stepping this along, right? So price is channeling, bars are relatively small, price breaks out of a channel, and the breakout bars are bigger. Momentum increases. Now we have this indicator that paints the inside of these bars that tells us that momentum is increasing. It goes from darker to lighter, and this is something that you can set in the parameters yourself if you want to change that. But it goes from a darker to a lighter color as momentum begins to increase. So, like I said, bars become larger. Now the ticks start coming in very fast. And that is this, you know, when this pencil thing work every time. That is this guy right here, this little arrow. There is a lot going on inside that little arrow. That's our speed tick indicator. Okay, and that's telling us that the rate of orders being processed through the exchange, not resting orders, orders that are actually exchanged, okay, between a buyer and a seller. They're coming in so fast and they're being exchanged so fast that it's very unlikely that us little retail traders that have our little home computers and our internet, slower internet than, I know a lot of us have really fast internet, but we don't have anything compared to what the big boys have that have the not only fast internet, but they're either inside the exchange or right next door to the exchange where their orders can be processed faster than anybody else's. All right. So that tells us something. So we don't want to compete with those guys. We want to watch and wait for the reaction to what those guys are doing. Okay. Now the bars become overbought. Now, for this particular trade setup, this is not absolutely necessary, but it is a real good option. Okay. So that's this pink outline. We're overbought. Okay. That means exhaustion is likely to be setting in. So we get that churning volume, and here's that dot right here. I told you that we have another indicator with a whole lot going on, but we put it in a dot. You know, there are whole trading systems based on this dot with all kinds of wavy lines and stuff on the chart, so much so that you can't even see what's going on with the bars. But we've managed to reduce it down to a single little dot. Then we slam into our major resistance lines, which are just floor trader pivots with some enhancements. The bar opens with divergence. That creates the rock star. A combination of things creates a rock star. Okay, and that's our point of entry. All right. Targets and stops. We trade with 5 tick targets and a 7 tick stop that we enter on a bracket order. Right? Meaning when I put my order on, my target and my stop immediately go on my Superdome, and then I can manage those as required. The 5 ticks is a hard target. Okay? I don't ever go more than 5 ticks. Now, we have a 7 tick stop, but we don't just sit on our hands. What we do is we keep watching the current market conditions and compare it to the conditions when we got into the trade. And if they change such that, okay, now I would never have gotten into this trade, then we start to shorten our stop. We want to get out of that trade because the conditions that got us in no longer exist. The reaction we expected right now didn't happen exactly right now. Sometimes it takes a little while, and the reaction happens almost every time, but it may take a little bit more, I don't know, a little more momentum or movement in the market before it finally changes directions within several ticks, okay? But we manage our stop shorter, never longer, okay? Never bigger. We don't use runners, and we don't use trailing stops. And I've tried that, and once you understand the logic, it'll make sense to you. Now, This is another setup called a naked rock star. Very much like the first one. Very much. There's a very small difference, okay? Price is channeling, price breaks out of the channel, momentum increases, bars become larger, ticks start coming in very fast. Now, the bar being overbought was optional in the Rockstar trade because we had support or resistance behind the trade. When we don't have that, we have to make sure that that exhaustion is setting in, and we can do that by either measuring for overbought or measuring how much price is churning, or how much the orders are churning, buyers and sellers, this volume. Now, ideally, you'd have both of these to trade this rock star. Ideally, but nothing's ideal. So one or the other will also qualify the trade. We no longer need major support and resistance. And then the bar opens with divergence, and that's our rock star. A large majority of our really fast trades are this one. All right, and a speed tick trade. Same trade. Okay? Same thing. Price is channeling. Price breaks out of a channel. Momentum increases. Bars become larger. Ticks come into the bar very fast. The bar becomes overbought, which is a requirement, not an option. Now the bar opens 5 ticks or less from this area of resistance. Okay? So we want to have resistance behind the trade in the event the trade goes against us. We see right here that price slammed into this resistance and then backed up and then opened here. So we have confirmed that this line has value to the people trading here. Now it opens here, 5 ticks or less. If price goes against us, we're hoping, or we're thinking, that this line is still going to have value to the people trying to push it up. And then more likely it's going to push it back in our favor and drop. Okay? That's how that, all of these setups, you'll notice, are basically the same. All right? It's just a few little things that make them different. All right. So here are some trades we took this week. And I can make that. Oh, what's going on here? Turn that off. Whoops. Stand by. Okay. All right. So these trades, I just grabbed a few of them, right? I just, we traded a lot of trades this week. Now, to be fair, this week was kind of weird. It was a little bit more challenging for us than a lot of weeks, than most weeks. So, but we still all got our trades and did very well. But it was, if you looked at the markets and how hard it's pushing right now, in a positive direction, it does kind of make things, I don't know, a little bit. You're becoming skillful at placing our trades was more important this week than some other weeks. Okay. But you can do it. It's pretty straightforward. And I'm going to show you. It's really not that big a deal. All right. So here's this trade. Again, this was this week, but I don't know what day or what time I'm doing here. I'm just showing you just a few different trades. All right. So look, we got price channeling. It's just kind of drifting around. Then it suddenly bursts out of this channel, starts pushing up this high of the day. All right. Now, we have a speed tick and we have resistance. Okay, so the one I showed you earlier had this major support or resistance. These are our pivots. This one also qualifies. We use the high of the day as support and resistance, but only minor support and resistance. But it still qualifies for a setup. Now, remember what I said. This bar did not have an overbought condition and did not have a pullback alert, but it did have resistance. Okay, this high of the day within 5 ticks, because this is 5 ticks. This is not an order, by the way. A lot of people get confused by this, this little tool that we use. This is called our OTS. So when you see this, this is not us placing an order. This is where the bar opens. And if we put on a sell order, this is our target. Okay, and this is our stop. If we got filled at the entry. All right. Now, the reason we use this is because I want to know relative to this high of the day, are we within that 5 ticks? Right? Because if it was way down here, then I can't count on this high of the day for resistance or to push it back in my favor. But if the 5 ticks is on the other side, then I'm going to go ahead and use that as that resistance. Okay. So you see that the bar opens. I'll just hit play here. And then I go up and I put on my sell order. I think I got a better fill on that than the open of the bar, which is not uncommon. Yeah, the bar opened at 63 and I got filled at 64, which is a better fill. You'll hear me in the trade room very often saying, I got a better fill than the open of the bar. And if you can get a better fill, so much the better. All right, so here's another one. Consequently looks very much like the last one, doesn't it? And that's one of the nice things about what we do is that it's the same thing over and over and over again. So price is just kind of trashing around, then it breaks out, pushes up, then kind of goes sideways again, and then pushes up again. This is where we're at. This is what we're looking for, okay? Now, like I said, I pulled some of these out, and I didn't even check them. All right, so here's a losing trade right here. I know that everybody's like, well, he only showed me the winning trades. I pulled this out and recorded it and then looked at it later and go, oh, well, that was a loser. Well, I'll just show it to him. So we had a speed tick. The only reason this qualified for a short here was because of this high of the day. So if you got into that, you got your 7 tick stop right there. But that doesn't mean price isn't about to turn. So now we start watching. Well, now we have a stronger potential for exhaustion. You see the bar has turned, from black to a lighter color, and it's overbought. Okay, that pink outline. I prefer only taking trades that are overbought because then we know exhaustion is likely setting in. So now that we're about at the end of the bar, I'm going to just hit play, and you can watch on the left how the trade was entered. Now, so you see, and this was something I talked about in the trade room the other day. I talked about not just putting the limit order, which is what we're doing, limit orders only until you've gotten you've kind of mastered this whole trading system, because you don't really want to take a lot of slippage. The system tells you the direction because it's very easy. We're expecting price to change directions here. Well, what direction is it going now? So this all of this information is telling us to anticipate a change of direction. Anticipate that this strong upward push is exhausted and can't push anymore until it rests a little bit. So, of course, a price pulling back is what we're expecting, and that's where our trade is. Makes it easy, though. Once you get the rock star, if it's at the top of the open of the bar, that means we're expecting it to drop. Okay? If it's at the bottom, we're expecting price to go up. Okay? So that makes it real easy. So I a lot of times, I wanted to show you this. A lot of times, price opens, the bar opens, we see one thing on the chart and we see something else on the dome. I don't know if you've noticed that on NinjaTrader. They're not perfectly in sync. We're building our own Superdome. And that's one of the things that we've struggled with and noticed, that ours wasn't in exact perfect sync. And then we started studying NinjaTraders, and theirs isn't either. So it may look like it, because if your eyes are going back and forth and back and forth and back and forth, you won't notice it. But until you record it and put them side by side, you'll notice. So anyway, this opened at 38 here. When I saw this, I thought it opened at 37, but I still went with a one tick better fill for my entry, which is a strategy for putting on orders. Now, we don't always pick the exact point that price is going to open and drop. We don't know. A lot of times, there's still a little bit more. The buyers are still trying. The sellers are coming in, and then it fails. We call that freight training. And then price turns. So there is a strategy of, if the bar, we'll just say it opened at 37. If it opens at 37, there's a strategy for getting filled at your limit price, okay? If you put it below, if you accidentally put it below, you're going to get a market order. And a market order can give you slippage. Okay, so if you hit this button right as this was dropping, you could actually get filled at 34, 33. And that's your order. Now, remember, we have small targets. Price may go 10 ticks, 20 ticks. We don't know. But we do know the sweet spot, the most likely, is around 5 ticks. It may go more, but 5 ticks is the most likely pullback that we'll get most of the time. All right, so we don't want to take a lot of slippage. So you'll notice I'm putting this on one tick better, and that is a strategy that I have told people in the trade room and that a lot of us use to make sure we don't accidentally put in a market order and you get a one tick better fill, or 2 ticks or 3 ticks. I'll show you some other trades and options for trade entry on some of these others. All right, so that's how I entered on that trade, and then you can watch, and it's going to be a winner. Any questions so far? Here's the beauty. It's the same thing over and over and over again. You don't have to learn a lot. You just have to learn a little and then practice it a lot and study it a lot. But you don't have to know a lot of different things. You don't have to have, like I did, 12 monitors to try to take a single winning trade. We have one monitor for in the trade room, we have one monitor for our, okay, watch this. Notice how hard this is moving. Anyway, we have one monitor for our charts, and then at home, one monitor for your static superdomes. And that's it. You don't take market orders to avoid slippage. Yeah, you put only limit orders, and that's why I said instead of trying to put your order on exactly the current price, because that could slip. But if you tried to get a better fill, you will only get a limit order at that price. If somebody, now what can happen is the price comes up to your order and it doesn't fill it because there was nobody there willing to pay it or buy it or whatever. So it's really simple if you don't make this too hard and you don't get excited. Again, I'm not sure which trades are in which order. So we've got an oversold condition. We've got the speed tick. This one is blue. This means that the orders are going through even faster. This is the second threshold level. We've got a pullback alert telling us that price is churning. And now we have the rock star. Now, notice we got the rock star. I haven't even done anything yet. I've just recognized it. Now I'm going to go up and I'm going to put the trade on. Now, notice this trade. Price open here, which was 88, I guess, right here. And I put 3 trades on because I trade multiples. And so this isn't exactly how I trade, but this is how people work their way up to what I'm doing. And when you're ready, to work your way up, so you earn your way to the level to start trading multiples. And so you'll start with a single and then you'll work your way up to trading multiples. Let me, this trade is a long or short. This one I'll be buying. Okay. So you'll notice it's a buy column. Rockstar was down here, so it'll be a buy. This is where you put the order to get a better fill, right? So this answers your question. The bar opened here at 88. You saw me put these 3 orders on. All of them are better fills. So the anticipation or the hope was that price would have a little bit more steam in it, maybe come pick up, 2 or even 3 of these orders, and then go in our direction. Okay. As it turns out, I think on this one, I got left in the dust and it went to target without me getting any of them filled. And guess what? That's a lot better than taking a trade that takes a lot of slippage and you end up losing the trade even though you got the order on, but you market it in. I'd rather be left in the dust all day long and just end up taking those trades off than getting into a bad trade. Support and resistance. Yeah, a lot of support and resistance doesn't work. But it does until it doesn't. So I asked this question the other day. What gives support and resistance value? What makes the lines work? Anybody? What gives support and resistance areas value? Nope. Jim's right. Other traders. Yep. They're a self-fulfilling prophecy. People believe that they're going to work, so they do. And those are the lines we use, which are the most common floor trader pivots. We use floor trader pivots and mid pivots because most people watch and respect them. Us believing in them, exactly. So those are our areas of support and resistance that we use. All right, so this was just an example of going for a better fill, and the worst thing that happens is you don't get in the trade. Well, I've been trading a long time, and I can tell you, not losing money is almost as good as making money. You can quote me on that. I think I'll have a t-shirt made or a coffee mug. Because you feel pretty good when you end up not losing on a trade that you could have lost on if you had placed a market order. All right. Let's look at one more, and it's going to look very much like this. Actually, I have a number of these. We could look at a lot of these. So we'll do some more later as we get through the presentation. Pretty much as many as you want. I just grabbed 18 trades that we took this week. All right. Price is channeling, moves up, goes sideways a little bit, moves up. Price is overbought. Speed tick. This is called a ricochet. Speed tick measures speed like miles per hour. Ricochet measures acceleration. All right. So we notice that when price not only gets up to 100 miles an hour, but it got to 100 miles an hour like 2 seconds, 0 to 100 in like 2 seconds. That's like, okay. That also is indicative of price about to change the direction. I'm telling you that right now, Anise. Watch it back on the video. I just told you what that green arrow was telling us. All right. Now, again, price opens. There's our rock star. We have divergence. We can look up here, and the divergence of price, which we have upward momentum in price, or prices getting higher and moving up. Yet, the rate of change indicator, the stochastics, the CCI, and the momentum oscillator, all are in divergence. All of those are saying, momentum is actually decreasing and in fact is going the other way. This is the strength of divergence. When price and momentum diverge, price will attempt to catch up with momentum. Okay? So I'm just going to hit play now so you can see how I place this order. I put that one on the price because it's just sitting there. When the bar opens and it's rather volatile, I can and will sometimes put it right on the open of the bar price. What I recommend, and again, this was a short, right? Because the star is up here, price has been pushing up. We're expecting price to pull back. Remember I said freight trading? That's what this is. It's still trying to climb, but it's bumping into this high of the day. I'm a trader. I don't automate things. No. I mean, you can try to pass off the responsibility to your computer or whatever. But no, I actually trade. I know there's a lot of interest in automation and such. I'm just not one of those people. I had a big interest in it also until I figured it out and realized that it'll never work. But that's another story. So, forgot where I was, but I think this eventually. Now look at all of this. So I think I put this one in there for trade management. Now, remember I said, look, if the conditions that got us into the trade change, I'm going to start to manage my stop, which means I would start scooting the stop down, right, and making it shorter. Because here's my entry. This is 7 ticks, so I would start moving it down. Yeah, that's what this was. Freight training. Gotcha. Yeah, we still and okay. So this freight training doesn't really freak me out while it's happening, because I'm also continuing to read what my divergence indicators are saying. Divergence still exists, meaning momentum is still pointing this way. So it didn't happen on this bar. It didn't happen on this bar, but look at the divergences are still telling me. Because of that, because of these divergences, I'm not managing this trade yet. Okay, that helps me decide how to manage the trade and if I should. If I didn't have any of these divergences, then I would have started moving my stop up. Okay, so I think that's why I put that one in there, just to show that the trade management. All right, let's see the next one. We'll do one more, and then we'll move on a little bit, and then we'll come back to them. All right, this one's a little different. We didn't have the sideways channel. We had a hard drop, and then it changed directions and a hard push up. So we're still pretty happy with this, but we want it to get outside of this zone. This zone is, price has already been channeling inside this zone. We want it to push out because it's going to be showing more probability and more likelihood of exhaustion. And it blasted all the way through from the low part of the zone all the way through. All right. Yes. Yes, Jim answered you there. All right. So now we're blasting up. We're pushing really hard. I mean, look how big those bars are. Now we're pushing up this high of the day, minor resistance, and we have our pullback alert. So there's some churning going on inside this bar, meaning that the buyers are well in charge here, right? Back here, the buyers are well in charge. Now the sellers have obviously been waiting around up in here because they're starting to come in. So now we're getting a lot of buying and selling going on. That's a good sign for us. So you see the bar opened at 39, but I got filled at 40. A better fill because I put it above the open, which is a good thing to practice. That's the beauty. See what I did here? This is practice. This is how you get good at what we do. You set this up and you practice it in the evenings instead of going to play golf or watching TV or, whatever else. This is like going to college. If you want to learn a profession, you better do the after hours work. And this takes after hours work. Now, I kind of adopted this because I started thinking of a profession. I started then thinking of professional athletes. How much time do professional athletes put into their profession that has nothing to do with game time? Yeah, I don't use Chart Trader. It is inefficient as it relates to our style of tradings, Ron. I've changed a lot of people. Chart Trader's fine if you don't need precision like we do, and precision can be practiced, okay? It's better for, it doesn't really matter exactly where you get in because you're going to be in this trade for the next 30 minutes or whatever. A lot of people think chart trader is good or better and they just don't want to give it up because they're comfortable with it. But I have proven to many of our traders the Superdome is way better and it's way more efficient, and you can get your trades on faster and you can manage those trades better on a Superdome, which is why it's there. Chart Trader was never designed for traders like us. All right. So the Superdome is absolutely the way to go, and I'm excited about our new one that's coming out. And by the way, if any of you use our Essential Add-on Suite, it's going to be included in the Essential Add-on Suite, so you don't even have to buy it or anything. If you already have the Essential Add-on Suite, it just gets added to it. Yes, and Jim's got a good point. We can see volatility better using the Superdome because a couple of things. I use level 2 data. You don't have to. I like to see these numbers changing. But more importantly, you'll notice the charts on NinjaTrader have a zoom factor, right? So the way the charts are built or designed is they want to get every, whatever time frame you're looking at, they want to show every amount of movement. So they're going to show the high and low extreme. So they're going to zoom in and out as necessary. If a chart is zoomed way out, you really can't tell how much price is moving, can you? You can kind of see little ticks on a bar, then it just looks like it's just barely moving on that bar. But when you look over here, and these cells are all the same size, always will be, and I can see price, what may look on a chart, price may not be looking like it's moving much, but here you can see it's big swings in price, okay? And it's jumping around and it's very jittery. You can't see that on a chart when it's zoomed out, or at least not very good. No, there's no charge in sim, James, and there will be no charge for hours. Yeah, the athletes are training. That they devote maybe 5% of their time to actually participating in their sport, and 95% practice, training, study. So this is what I do, and this is what got me to be a successful trader, and I never want to stop doing it. That's like Tom Brady just going, I'm a pretty good quarterback now, making a bunch of money. I'm just going to show up for the games. Right? So that's my attitude as it relates to trading. And the people that have seen success with our system adopt that attitude. All right? All right, and there's that. All right, so we'll show you some more of those in a minute. Let's move on a little bit. I know you want to know about the results. We showed this on Thursday, but it bears showing again. Again, these results are from experienced traders trading our system in our trade room. You won't get these results until you've worked at trading our system and practiced. And even then, you may not get these results. And I'm saying that because a lot of people think they're going to practice, or they think they have the best intentions, kind of like joining a gym, right? Well, I joined. How come I'm still overweight? How come I'm still... Well, you actually have to do the work, okay? So I'm going to repeat what I said earlier, and that is never trade with money that you can't afford to lose, because you probably will lose it. Past results are not indicative of future results. The information provided here is for educational purposes only. We're not making any promises, either express or implied, about your success rate trading the Intentional Trader trading systems or products there. Now, that is so important at this juncture because I don't want you feeling like I'm guaranteeing you anything if you're not going to work at this. So I'm actually leaving this on the on this slide, so you cannot miss it. All right. Oh, thank you, Keith. Yep, Keith put in a page on our website, a link to that page where you can see all of this. All right, so 4,000 trades a day. I mean, that we've taken over this 3-year period, 2021 and 22. We'll add 23 at the end of this year. We'll add that to these results and just keep a running tally. About 3 hours a day, 5.5 trades per trading session. About almost 2 trades per hour. An average of 5 ticks per winning trade, which we never change, or 5 ticks losing, because we do manage our stops. Remember, even though we have a 7-tick stop, we don't always take a 7-tick stop. Okay. And then the fees and commissions have been deducted from these totals. Now here we have the 6E, which we're not yet trading in the trade room anymore. This year we added, we took this out and put the NQ in. So I'm just going to add another column for the NQ. This column won't change, but it'll stay because it's part of the calculations. All right, so that's 79.1%, which I don't know. Is that good? Those of you that are visiting, are you getting that kind of that type of number on winning trades? It's certainly doable, and we have people that have been in the trade room over 10 years. We have people that have been in the trade room 2 weeks. So people keep coming back and have been since 2009. So if you trade a single contract, you're looking at about 88,000. But the idea is you grow your account and you earn your way to then trading 2 contracts. And then you earn your way to trading 3 contracts, and just keep doing the same thing over and over and over again. You don't have to learn anything else. All you have to do is practice and stay sharp with your execution and trade management, which is why there's such a thing as the playback connection in NinjaTrader. So you can practice your trading. Most people aren't going to practice because they don't know if they have an edge or not. So why practice when you may be wasting your time? Right? That would be me. I hate wasted time. But so I don't want to do anything unless I know it's going to have good results. So we've already, almost 15 years shown that we have an edge, obviously. So practicing it is worthwhile. There are people here in the room with us right now that practice every day, and they'll tell you that practicing actually works. It actually works. Amazing. All right, any questions about this? I see that I've been getting some help from some of my people. I appreciate the help. Not sure if I didn't answer something. Lawrence, I scale my trades most of the time. Each trade is likely to be more than a single contract, and I will put on more than one trade. You saw me place that trade on the practice on the video where I put on 3 orders, right? My trades are going to look a lot like that. You can if you're fast enough, but it's kind of hard to do. Now that would be what do they call those? I don't remember, but no, I don't do any of that. We just trade what we can because it happens so quickly. I don't know what the conditions are on the other markets when I'm making a decision on the one I'm trading. Let's see, where do I have one of those? I bet I can. Oh, I know what I can show. I can actually show the video. Here's a trade room video of yesterday. Oops. So here's our trade room. This is the video of our trade room from yesterday. That's what it looks like. No, we're not on the web platform, and I don't know that we ever will be because it's not going to be fast enough for what we do. I'll look at it later, but it's still too new. No, it won't. ATM will not do averaging, which I've been asking for 15 years, and they go, "Oh, that sounds like a good idea. We'll add it to our list of things," and they never have. But version 2 of our version of the static Superdome will have averaging. All right, so there's our trade room. All right, we'll keep moving on. Show you some more trades. And I can show these to you until the cows come home, right? And it's gonna keep looking the same over and over and over because we just do things the same way every single time, every day. Let's see here. I'm not gonna make you sit through all of it. I can get it down to just before the next bar opens. All right, so you can see my mouse on the left side. I see where now I went for a better fill. Okay, you see that? Bar opened at 45.25.75, 45.25.75. If I put on an order here, it could become a market order, meaning it'll fill at whatever price, even if it starts heading up this way. Well, I don't want to sell it up here. I want to sell it here or further down because I'm saying sell it. I meant buy it. I'm going to buy it here. I'll buy it here all day long. I don't want to buy it here because I don't know how far this pullback is going to go before it wants to go down again. My expectation is we have a downward bias here. The expectation is it's going to continue down. But I also know that price drops, pulls back, drops, pulls back, drops, pulls back, drops. So that's what I do know. And that's what I'm trading. So I only want to take this if price is going to go this way. Now, so I put the order on at one tick better. Okay, well, most people understand buying and selling. So that's been my experience. Yeah, I could have used close, but I kind of like to simplify things as much as possible. All right, so why did this qualify? Speed tick, support, pullback alert, and this was 5 ticks or less from the support line. So it qualified for a speed tick trade setup. I showed you that. Are you sure Einstein said that? I love the meme that says, it shows Einstein and he says, I never said most of the stuff people say I said. Yeah, so I need it simple. For me, for decision making, for my gut, for my levels of stress, I need it simple. So I wasn't finding it. So I did everything I could to create it. Is this the same one? I think I already showed this one. I may have accidentally made a copy of the same one. Or did we start over? Wait a minute. Wait a minute. Let's do this. Oh, it went away. Hang on. All right. Now, here's the NQ. Funny thing about the NQ. Real quick, I'll stop it here. We stopped trading the NQ for a long time. And we stopped because it, a couple years ago, it got just really jumpy. So we took it out and replaced it with the 6E that I showed you. Well, we had a trader in the room. He goes, look, you know what I've done is I've doubled the tick size. And that tends to slow things down so that it's a very tradable instrument now. So I tried it for a while, and by golly, it is. So what you're seeing here is instead of 0.25 tick size, it's a 0.5 tick size. All right. And it makes it much more manageable for us. Now, instead of it being $5 a tick, it's $10 a tick. But we're all doing much better with the NQ now. A little bit slower and easier to trade. All right, so price was coming from this little bump up, but look at how hard price has dropped here. I mean, seriously hard. What do we know about the markets and price? It constantly pushes and pulls back, pushes and pulls back, pushes and pulls back. Well, this is push. So our only mission is to try to figure out where's pullback, because we know it's coming. It always does. It always will. We know it's coming. So we start looking. Is there any information here? No. Any information here? A little. Any information here? No. Any information here? Yes. It's starting to get a lot more saying, okay, exhaustion is setting in. And then not only are we moving this way, momentum's already started to move this way. This time, the stochastic and the MACD oscillators are suggesting momentum has already shifted. All right. And you notice the bar is open. I haven't even put on the trade yet. And I go up and again, a better fill. And that's, and that's how long our trades last sometimes. Send me an email. Oh, wait, you know what? Hold on. Let me pause this. I think I can put it in the chat here. No, not upload. There's a PDF that tells you how to do it. So, is there anything you guys wanted to see that you haven't seen? This is, like I said, you don't have a lot that you have to learn. You just have to make it like it's second nature. to where you become unconsciously competent because all you do is just practice, 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 practice. And here's the cool thing about the playback utility, the playback connection in NinjaTrader. When you practice, you could practice at double speed or triple speed or 4x, because then you get used to practicing at that faster speed and placing your trades faster and managing your trades faster. And then what happens is you come to the trade room, you start trading the live markets, and it feels so slow because you've gotten used to being fast. So you can train yourself to do this, and in not that long a time. Yes, the market will sometimes not fill your order. That's exactly right. And that's the point I made earlier about, the worst thing that can happen is you don't get filled. And not losing money is almost as good as making money. I may have gotten stopped out here. I don't remember. Yeah, exactly. Oh, darn, I missed that trade, which could have been a losing trade. Of course, if you miss a trade and then it's a losing trade, you go, man, sure glad I missed that trade. Oh, that's the same one. That should have been removed. All right, this is RTY. Well, like I said, I can show you a million of these. They all look the same. You don't have to learn a ton of stuff. You just have to work on your skills. And patience. Because that's what it's all about, is waiting for these exact confluent conditions to come together. But they do, like I showed you, several times a day. Anywhere from average 6 trades a day, sometimes 10 or 12, sometimes 1, sometimes none. MQ is great. It's fallen right into our program, and we're doing great with it. All right. I said there's just nothing really I have to show you that's any different. It just goes on and on and on, the same thing. So we're doing our Black Friday special now. Here's the coupon code. So you can just go to our shop, Keith. Keith, you're standing by there, Keith. Have you got all this ready for me? Keith, look at him. You're awesome, man. Keith does not work for me, by the way. He's just one of our peeps that trades our system, and we appreciate his help. But there you go. That's our Black Friday 20% off any of our programs. Any program you buy, if it's not the Pro Trader, you can get 100% credit when you decide to upgrade. And most people eventually do. Either they jump right into Pro Trader or they upgrade to Pro Trader, because we're giving you pretty much everything, and it's a one and done kind of thing. You don't ever have to buy anything from us again. The only other thing you'd have to buy from us would be if you want to run on 2 computers, you get 75% off the price of the second license for the other computer. Other than that, there's nothing else to pay for. So anything we develop in the future, like the new dome I was just talking about, if you're in our Pro Trader program, you get it for free. It's all part of it. Okay. I'll stay here until dark if you guys have questions that I haven't covered yet. And I'm happy to answer questions for you guys. I do trade the NQ. Yes. That's what I just showed you. That was this one. This is the NQ. We didn't used to trade the NQ because it was too jumpy. But then we changed the tick size and it's more manageable and just fits right in now with what we're doing. So I get that question a lot about, Judith, about the 5-tick target. And yeah, you know, I've been doing this since 07. Started really hitting it about 08. Started teaching some friends what I was doing in 09, and that's when the trade room opened. So a long time, right? So I've had a lot of opportunity to study and to take, to collect all the data and decide where is the sweet spot, because there's no one right answer, right? There's no one right answer, but there's a sweet spot. So, you know, we have some traders that have changed the 5 ticks to 5 or 6, to 6 or 7 or whatever. And that's totally up to you, but you should collect the data. A 5-tick target was what most of the time, if there's a pullback, it'll go at least 5 ticks. Most of the time, about 80% of the time. Yeah. Almost all the indicators except for Rockstar and the Super D are compatible in Bloodhound. I just talked to Jeremy last week. We're working on getting those two compliant. Yes, 1 minute is the time frame that we trade. So again, if you think about it, it's the information that's coming in right now is the most important information for what's about to happen right now. Think of it like a bouncing ball, right? You know from watching a bouncing ball what it's going to do immediately when it comes across resistance. But what it's going to be doing 5 minutes from now, you don't really know because you don't have any information on that. Yeah, so I trade, Alex, for a net 3 winning trades per day. And what I mean by net 3 is if I lose the first trade, I have to win the next 4 to be at net 3. Okay? That's my target for the day. I'll do exactly the same for my stop. Net 3 losing trades for the day, and then I stop. I'll do that 2 or 3 times a month. I'll have a net 3 losing trades in a day. Typically, coincidentally, they turn out to be when there's a strong push or maybe a news event that happened that I didn't know about because it wasn't scheduled or something, and price is in the middle of pushing really hard in one direction. So my plan says if you lose one trade, you better take the next one if it sets up. So I could, over 3 minutes, suddenly get stopped out on 3 trades, and that's it for me for the day. And I'm fine. That's fine. It's part of my plan, and that's expected. I'll probably, I am. You know, we have our, in our members area for our pro traders, we have a program called Fast Forward. And I'm building a new Fast Forward program, and it's taken me a long time, and I've still got a ways to go yet. but there'll be a full video on using EAS and setting up market replay and all of that. A new one. There's one there now, but I'll do a new one.